Well, good morning, everyone. I'm David Paul I'm Managing Director of VectorVest in the UK. Markets don't look good, folks, and I'll start and give you the bad news. That's the VectorVest composite of the UK. I've added the VectorVest medium-term market timing system known as the DEW. I'll spare you the acronym. But it in fact gave a sell signal quite a few days ago, about a week ago, and as you can see, markets making the UK market as the American market making a series of falling tops, and the bear market that we've been in since the start of the year is still proceeding. Those of you that are technicians, if you were to actually look at the market action this year, that's the last 6 months I put up, but you'll see that it's following a beautifully constructed trend line along the tops. In fact, many technicians said that the last sell that we got a few days ago, a couple of weeks ago, was actually too easy. They didn't expect it to happen like that because it looked too obvious, but nevertheless, market is selling off. And we had a strong down day yesterday. I think we're probably due for a little bit of a short-term bounce, but there's no doubt that the trend of the markets on both sides of the Atlantic after Mr. Powell's fairly hawkish talk last Wednesday night is not looking good. There's the American market, and that's a similar market timing system for the US market, and you can see that it's pretty much the same on both sides of the Atlantic. So I'm recommending to VectorVest customers that we don't take any new positions at the moment until the DEW turns back up again, and that those positions that we have, we need to watch our stop losses very carefully indeed. So I had an hour session with VectorVest customers yesterday afternoon, and although we looked at quite a few stocks that look exceptionally interesting on both sides of the Atlantic, I kept reiterating that I didn't think there was any hurry to get involved until market timing in fact rights itself again. So what some of those stocks, I think that there's still a great deal of energy left in 4 imprint, and it's sitting at £42 at the moment. I think that there's energy in that stock, and I would put a target in that stock up around £50. I'm not saying it's going to get there in 10 minutes, but nevertheless, that's the target from that bull flag. We've been into it since about 38, and certainly in my own position, I don't intend to lose any money there. My stop loss is at entry, although I would be tempted to add to that position if it were to break above that high of a few days ago. Games Workshop, I spoke about it last week. Games Workshop put out a very, very good note last, I think, Friday about a tie-up with Amazon to, in fact, put some of their games online. Clearly that's going to be huge, that leveraging effect worldwide, and Games Workshop was up about 16 points on the day, 16% on the day. As you can see, the stock came off that 78% retracement to the tick on a big volume day up last week. Didn't give any of it back yesterday, but I would suspect it's going to pull back a little bit, and I think that as the energy abates, you'll probably be able to buy into it at that last old high. So no hurry to do anything there. I would give it some time to pull back over the holidays, but nevertheless looks exceptionally good to me after a period of accumulation that lasted most of this year. Now this is another stock which is a bottom feeding type stock. It's called Cape Tech. On VectorVest, the fundamentals are outstanding, but nevertheless the share is trending downwards. I've charted it on a weekly chart from the COVID lows, and you can see that it had an outstanding pandemic. Gave that back, a lot of that back, and it's sitting on a 62% retracement of the run-up after the pandemic low. It's fallen in a falling wedge, which is a bullish pattern. Nevertheless, it's still trending downwards, and I would like to see a close above the trend line, which defines that falling wedge. And clearly the general market is falling, nothing to do at the moment, but it had a very good day yesterday. In a negative day for the overall market, and I would expect that as soon as the general market decides that it's about to move up again, that Cape Tech looks a very good bottom feeding opportunity. And this is Lion Trust, folks. Now, Lion Trust was the very first stock that I bought in April 2020 after the COVID sell-off, and we had a great run. And you can see on the chart where it starts to go red at the top. That's the VectorVest stop loss kicking in. And after that run up, I sold it. And the VectorVest customers, I think, sold it up around the £20 level. And it's fallen. Now it's back on a buy on VectorVest again, and as you can see, it's broken up through very important resistance, and it's pulled back in a flag type pattern, which is quite positive. And I've blown that chart up. This is a weekly chart since COVID, but I've blown that up, and that's what we see on the daily chart. Now, in the last run up, folks, if you actually carefully scrutinize the chart, you'll see that the up days were characterized by rise in volume, which is very good, and now it's pulled back in that flag type pattern, and I think that the general market is down. I marked the general market on with those red and green triangles. Those red and green triangles haven't got anything to do with Lion Trust, except for the fact that Lion Trust is one of the 2,200 stocks that make up the VectorVest composite. But that's the overall market, and you can see how well the share rises and falls with the overall market. So a breakout of that flag, accompanied by the DEW market timing indicator, that green triangle turning up, and I think that there's a lot of legs in Lion Trust. That's another bottom feeding opportunity. So Cape Tech and Lion Trust look as if there's a lot of legs in those stocks. And then we move, I spoke about Thungela last week. It's pulled back also in a flag type pattern, pulled back into the previous range. It's now broken up, it's pulled back. It broke up from the lows of rising volume, and it's pulled back on falling volume. Energy stocks are difficult, and certainly the whole oil market has been bogged at around these levels now for what, 2 or 3 months. I'm very positive of energy over the next month or two, and there are I think that that's a very low risk swing trade. And when I speak about risk, I'm talking about only a few points of risk for a huge reward if the trade works. But both Thungela and Serica, which is at a similar level, I spoke about Serica last week in natural gas, both of them are not for conservative investors, for adventurous investors that have got the proven ability to actually put a stop loss in place, and more importantly than putting the stop loss in place, to have the confidence and the strength and the resolve to take action on the stop loss. So if that's you, great, then I think there's huge opportunity in Thungela and Serica. If that's not you, and you find yourself giving it another day, giving it another week with stop losses, then just ignore those two. All remains for me is to wish everyone a very merry, happy and healthy Christmas, and a prosperous and healthy 2023. I'll be back in Core Finance in January. I look forward to seeing you all then. Thanks very much. Have fun.